Ladies and gentlemen, good day and welcome to the Apollo Microsystems Q2FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. I now hand the conference over to Mr. Mohit Lohia from ICICI Securities. Thank you, and over to you, sir.
Yeah, hi, good morning, everyone. Thank you for joining us today for Q2 and H1 FY26 earnings call of Apollo Microsystems Limited. First of all, I would like to thank management for providing us the opportunity to host this call. From the management side, we have Mr. Badam Karunakar Reddy, Managing Director, Mr. Adapalli Sai Krish Kumar, All-Time Director Operations, Mr. Sudarshan Chilluveru, Chief Financial Officer of the company. So without further delay, I would now hand over the call to management for the opening remarks. Thank you, and over to you, sir.
Thank you so much. Good morning, everyone. Happy Guru Purnima to all of you. Thank you for being with us today. It's always a privilege to engage with our valued investors and provide updates on our performance, strategy, and future outlook. I am pleased to share that we have delivered our highest ever quarterly revenue and PAT, marked by consistent execution, operational discipline, and a strong commitment to indigenization and the Make in India initiative. I trust you have had the opportunity to review our financial results, a letter to shareholders, and press release and investor presentation. This marks our second interaction for the fiscal year 2026. Let me first take you through our consolidated performance for half-yearly and second quarter ended September 30th, 2025. H1 FY26 marked another period of strong growth and operational excellence. As we continue to build on the remarkable momentum achieved in FY25, revenue grew by 42% semi-annually to 359 crores, up from 250 crores in H2 FY25, which is almost in line with the kind of a guidance that we have been giving. Supported by steady execution of our healthy order book and the seamless ramp-up of several products into serial production, EBITDA stood at 100 crores, reflecting a robust 81% semi-annual increase. EBITDA margin also expanded by 600 basis points to 28% in H1 FY26 compared to 22% in H2 FY25, underscoring our sustained focus on the productivity improvement and cost optimization. Profit after tax rose sharply by 97% year-on-year basis to 48 crores as against 24 crores in H2 FY25. The PAT margin improved by 330 basis points, reaching 13.3% in H1 FY26, driven by enhanced operational efficiency and a more favorable product mix. In Q2 FY26, we delivered another outstanding performance, continuing on the momentum from a landmark FY25. Revenue surged by 69% quarter-on-quarter basis to 225 crores, up from 134 crores in Q1 FY26, a result of our robust order book execution and successful transition of multiple products into the production phase. Our EBITDA rose sharply by 45%, reaching 59 crores in Q2 FY26. PAT registered a 70% quarter-on-quarter increase to 30 crores compared to 18 crores in the previous quarter. These results underscore our continued operational excellence and reaffirm the strength of our growth trajectory into FY26 and beyond. We are pleased to begin with two significant milestones that marked our continued growth and global progress. First, updating on the corporate actions. On the CapEx side, Unit 3 Phase 1 civil structure is complete. Phase 2 civil structure, has already started, and partial production in the Phase 1 has already started, and the full-fledged production, will be starting from, end of this financial year or probably by Q1 next financial year. As far as the acquisition point of view is concerned, we have already paid 107 crores for acquiring 100% equity of Ideal Explosives Limited, which we have already informed to all our investors. Looking ahead, we expect the revenue to grow at a CAGR of 45 to 50% over FY26 and FY27, driven solely by the core business, excluding any contributions from the recent acquisition. This growth is underpinned by a healthy order book and multiple products entering the production phase, one after the other. We have evolved from being a subsystem and systems manufacturer to establishing ourselves as a full-fledged weapons manufacturer, a significant milestone in our journey of growth and technological excellence. Building on 40 years of technological excellence, we are poised to evolve into a multidisciplinary defense system powerhouse to drive next-generation innovation. Our vision is bold, built on strong fundamentals and an unwavering commitment to creating value for our stakeholders. Thank you for your continued trust and support. We now look forward to addressing your questions.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nilabja Dey from Ashmore Research. Please go ahead.
Okay, sir, good morning and congratulations on an excellent set of numbers. I think you are on your trajectory of maintaining the guidance. Sir, actually, my fundamental question, in case I go through your presentations very carefully, you have a strong dependence on the domestic sector, everything. But how you are thinking of managing or catching up the whole defense spend happening specifically, say, in Europe? And what about the strategic tie-up? Because some of your competitions are already doing the same. They are connecting with some of the Europe's key defense manufacturing companies. So, because there is a domestic cyclicality of these orders, we know how difficult sometimes it becomes. Can you throw some light how you are going to tackle that exports and tying strategic tie-ups and building more international footprint? Thank you.
Yeah, thank you so much, and for, keenly understanding, what we are doing. So primarily, we have been a out-and-out, technology development company it's a core technology development rather than a system integration company or a lead integration company, right from the beginning, actually. Of late, we have been working for last 40 years with, DRDO programs primarily, and as we have already told you several times that, we have presence in every indigenous missile program of, DRDO. Last, few years, as you rightly pointed out, last few years, we have started, trying to look forward to making a complete, system or a platform by ourselves. So our journey on this particular direction has started a bit late compared to other lead integrators who are actually getting a tie-up with other companies and doing a system integrating job. Okay, that we caught up a little bit late, but carried by a huge technological, experience that we have, and, right from a system and a subsystem level, we have recently started entering a strategic ties with different companies, which we have recently also announced that we have entered in, partnership with an American company for developing a rocket motor, where the complete grad rocket is being developed by us. We already have few, interest coming up with, different countries. We also have been communicating with you that, we have certain technologies which are already matured in the naval domain, which we are talking to different companies from different countries. We have submitted our proposals. We also submitted the request to MOD to give us a clearance for export of such technologies. These being a very sensitive systems, it will take some time, but the interest is very long, and, multiple due diligence are already taken up by these, service companies, from different countries, particularly from Middle East and from the European region. And going forward, you will see that, we will be able to clinch a big ticket projects for these technologies. And I wish you would appreciate the point that these will be 100% indigenous technologies rather than just being a lead integration system export.
Great, sir. Thank you.
Our participation is there, domestic projects, number of programs, our participation is there. With our present facility, we are not able to take up even foreign orders, I think, we have already announced one project, a good project from UK, we are holding one order. It is the 113 crore order we are holding. And we are expecting more and more orders from Saudi also we are expecting some orders, and Europe side also we are expecting some orders. Yeah, it's going on.
Great. Thank you.
Unit 3 is ready, then number of people visited already there. In fact, we are time to time we are updating the overseas companies. Once our facility is ready, they want to come and audit our facility, and they want to have a MOU with us. Like last time, a big team has visited, almost 6-7 people team has visited the present facility. They visited, they are so happy, and they are even visited our upcoming units also. Once we are fully operational, then we are going to enter into a MOU.
Surely, sir. Wishing you all the best. Thank you.
Thank you.
Thank you. The next question is from the line of Devesh Shah from Uchit Capital. Please go ahead.
Hello. Sir, first of all, congratulations for very good results. And, sir, my 2-3 questions regarding growth of our company. Since we have completed the corporate action about acquisitions of IDL, IDL is now 100% subsidiary of our company. Sir, can you please elaborate on what will be our strategy for IDL for a short term for 1 year and for the long term of 3 years? Where you see the IDL after 3 years? Because as a layman investor, as far as explosive is concerned, we see a huge opportunity, and only listed entity for a listed entity is solar industries. So we tend to compare IDL with the solar industries. So what is management view about IDL? So can you elaborate about the IDL strategy? Then I will come up with next question, sir. Please.
Thank you, Deveshi. Very, rightful question. But I will be able to give you a very short glimpse, not a very detailed one at this point of time, because, we are evolving a much detailed presentation on it. We will come back to investors and do it subsequently. But broadly, I will tell you, which we have already given a rationale for, acquiring this company. I would not like to take any of my, other companies' names. They are all one of my big customers as well, and also a competition to some extent. So the point here is that, the acquisition of IDL is both backward as well as a forward integration for us. That's point number one. So several of the systems that have already got matured, we want an explosive chain also to be available with us. That's how, we have started, looking for an explosive company for acquisition. That's how we have acquired IDL Explosive. So point number 2 is that, individually as an explosive company, we would be moving towards a direction of, manufacturing, critical high energy explosives in IDL Explosive, and also creating a multiple, filling lines for different calibers of, artillery, as well as for the weapons actually. So for which we have already started, preparing proposals for it. And we have already negotiating with some of the manufacturers for acquiring the machinery, all such, aspects of it we have already started taking. You will get to hear a lot of, actions happening on IDL Explosives, I think in next 1 week, 10 days onwards, we will keep announcing on it. We are entering into some strategic relationship with different companies, both domestic as well as international, along with the existing captive requirement that Apollo has. So this is a glimpse of what we wanted to share with you as of now. More in detail, we'll keep you keep you posted. But broadly, I can tell largely to all investors that that a lot of initiatives are being planned. Specific consultants are appointed. For complete overhaul of IDL Explosives. You will get to hear from time to time, sir.
But sir, my gut feeling is that IDL can be as good as or bigger than Apollo itself. So is it possibility after 3 years?
On the Guru Purnima day, why should I say no, sir?
That's a positive answer.
We are thinking big, we are aiming big. Okay, that's what we can say, yes.
Okay. And sir, my second question is regarding our growth prospects, capex for unit 3, I think first phase is just operational started, and I think it will be over by March 26 or first quarter, as you your opening remark. So generally, last year you have projected a growth of about 45 to 50% for Apollo. So after the Unit 3 starts first phase, so what is your expectations for growth for financial year 27, generally?
Like if we compare the present facility and once Unit 3 is ready, we are enhancing our capacity to 8 times. Present this thing to once our Unit 3 is ready, it is almost 8 times enhancing the production capacity. And same time, a lot of domestic this thing also must have here now. Government is one by one they are clearing. Maybe before this financial year, and we are expecting good orders from our MOD sir. And also once Unit 3 is ready, we are also going to sign MOU with some of the overseas companies also. Good growth will be there once we start Unit 3.
Okay. And sir, my last question about the EBITDA margin. I think in the previous conference call, you have just cautioned us that the EBITDA margin in second quarter will be little bit less. And this quarter, for EBITDA margin is about 26.3%. So can we consider this EBITDA margin as the lowest, or still we can go lower?
Sir, we have been telling constantly that, that there will be a revenue growth, but sometimes in some quarters, some of the projects will get speed up faster, some of the projects will get slowed down based on the end customer requirement, where one common customer, we are handling multiple projects. So depending upon the product mix, certain, margin levels, small here and there, small variation will be there. But, the momentum, is definitely not going to be, disappointing for any one of us actually. That's how I know broadly with the kind of the current order book that we have. That's how I can comment as of now.
Okay, sir. Thank you and all the best, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Rupesh from Long Equity Partners. Please go ahead.
Hello, sir. Thank you for the opportunity and congratulations on fantastic result. I have two questions. First question, sir, is recently we won a TOT for mechatronic fuse for grenades. So can you just give some color around the opportunity size? When will the TOT be completed? When can we see some trial orders, commercial orders, some color around that? And then the second question is on the naval component. So I think we're present in all torpedo programs, ALWT, ESWT, Varnastra, and I think some of the orders I think are there. So if you can, for each of the three programs, if you can tell where we are, how many, and what is the opportunity size, when will we receive the order, when will it be executed? So these are the two questions, sir.
Sir, size at this point of time, we are restricted to, give you the size of the opportunity. But ALWT, AON approval has already come, which is there in the market last couple of weeks back, Ministry of Defense already given. You will also see a good order, flowing for ESWT to, Bharat Dynamics Limited from Indian Navy. And we having a significant participation in the program, we are also going to get. Most likely that, this ESWT order, most likely we may get within March is what we are getting to know as of now. Okay. So ALWT AON is already released. Once, the tender is out, BDL is a partner for it and, our share of, business we'll be getting in that as well, sir.
So Varnastra and then the mechatronic fuse, sir.
Mechatronic fuse, recently we have taken a mechatronic, so basically a mechanical fuse. We have developed few mechanical and mechanical plus electronic fuses indigenously, but for certain applications, instead of we developing, we have, taken a TOT from DRDO, which is applicable for certain motor applications, that's the thing. The opportunity size is very big. It's a recent TOT. So we will be absorbing the technology by developing a few prototypes in next, 1 or 2 quarters. and get it validated and something. I think in next 1 year down the line, I think, we'll start, taking the opportunities, Already we have some interest coming up from various customers. That's how, this Fuse TOT we have started taking from DRDO.
Okay, sir. And final question, if I may squeeze in, sir, BrahMos, I think, is coming up with ER extended range and BrahMos NG. So do we have some presence in that? And at least to me, it seems like in emergency procurement that is one of the big programs. So can you just comment on it?
BrahMos, the new version, our participation is there. One of the subsystem already we received order. We are working on it. And other things we have participated, and they are going to decide any time, maybe next 1-2 months time. Now we are also expecting couple of projects from BrahMos also. But one project already reviewed.
Sorry, go ahead, sir.
BrahMos, one project already we are doing. And if I remember correct, some 5 to 6 projects already we have participated. Technical evaluation is going on. Once that companies know, they are going to decide actually. We are expecting more and more orders from BrahMos next 2-3 months time.
What is the outlay, sir, at the program level, at ministry level? Do you have some number?
I think that's not appropriate, to share. We have certain, critical information, but I think it's not appropriate to share.
Okay, sir. I'll come back in the queue for more questions. Yeah.
Okay.
Thank you. The next question is from the line of Prateek Bagadia, who is an individual investor. Please go ahead.
Yeah, hi. Good morning, sir. First of all, congratulations for a great set of numbers. And thanks for giving me this opportunity. So I have few questions. First, I just wanted to talk about the promoter pledge part. So as I can see in the September quarter, it has reduced to almost 35%. So just wanted to know if we are on track of the earlier guidance of getting it to 0 by FY26. Are we on track on that?
Yeah, like if you see, we are reducing. I think next 1 week time we are going to see, I think we have every month we are reducing something. Yeah, definitely. Next 5-6 months time, I'm going to close all the pledge part. That's what I'm planning.
Okay. Thanks a lot, sir, for that answer. My second part I wanted to know is on the receivable side. So if we see our receivable is almost 360 crores, that is close to Q1 and Q2 revenue. So can you throw some light on it, as in, is it going to be the same going forward as well?
So this financial year end, you will see a significant reduction in the receivables actually. Some of the long gestation projects, which the receivable this thing is over, it has almost come to a final phases actually. I think Q3 to some extent visibility will be there. Q4 significant reduction will be there.
So I assume that going forward from FY27 onwards, receivable should be on the lower side. Is my understanding correct?
Comparative levels lower.
Let us say if we are doing more of production orders, the receivable this thing will reduce. A production item, line of production will be there. Once we supply, immediately within 30 days time we will be getting this thing. If it is a R&D development plus production orders, it takes more time for the releasing acceptance and releasing payment.
Okay. And so my final question is on the export side. So last time when we spoke about this, I think my understanding was that we don't directly apply for export orders, but via organizations like DRDO. So I just wanted to understand what kind of opportunity do we see in the export side, the process, and probably in the next 1 or 2 years, what could be the revenue split between domestic and exports? If you can throw some light on this.
See, primarily there are two aspects of it. Certain technologies which we have developed where, along with the DRDO, for that, we need to take both DRDO approval and Ministry of Defense approval, both. Okay. Certain technologies which we have developed in-house, we just need to take a Ministry of Defense approval for exports. Okay. So this is how the process would be there for the type of business that we are currently working. As the day stands, we are having little over above 100 crores opportunity of as an export order, which is presently a kind of a development project actually, okay, and it's a very critical avionics system. As far as the mix is concerned, at this point of time, we are not able to give any guidance for it, but in subsequent quarters, as we get more such opportunities and orders, then we will be able to give further guidance on that.
So, but the process would remain the same, that we are going to apply through organizations like DRDO. We are not directly going to apply for it.
It's the same for any.
It is same for any organization. It is Indian the procedure we have to follow. Yes.
Okay. Thanks a lot, sir. Thank you and good luck.
Yeah, thank you.
Thank you. The next question is from the line of Anand from GK Global. Please go ahead.
So thank you for the fantastic presentation. Can you please elaborate on your order book?
So, little less than 800 crores is the order book as on September end actually. Okay. Over and above that, in last one and a half month, we have received few more orders, and little amount of production orders, but significant amount of, new development orders, for the next generation, weapon programs and next generation platform programs actually. So that's how, I can say.
And what is the execution timeline of this order book?
So we keep getting some short-term projects, some medium and long-term projects, but I think, as far as this financial is concerned, as the day stands, whatever guidance we have been giving, we are maintaining it, and I think going forward for the next 2 quarters also, we will be maintaining the similar guidance actually.
Okay, thank you, sir.
Thank you. The next question is from the line of Amit Kumar from HDFC Securities. Please go ahead.
Good morning, sir. First of all, congratulations to all of you for a great set of numbers. I wanted to understand about the proportion of developmental projects in overall pie compared to the production. So maybe you can spend some time on explaining the proportion with respect to revenue, with respect to order book, and in our product portfolio, how much would be the developmental proportion, and how much of this is actually going towards production, from development to production it is moving. So that would be helpful.
25 to 35% in between band, is the production size compared to the development, core development come production orders actually. Going forward,
okay.
It may increase up to 45%. That's what we are contemplating. As you all know that we are expecting some very large cap, projects, going forward, for which all of us are waiting very eagerly. Our infra is getting ready. In all aspects, we are fully getting geared up for it. So once that strikes, I think, and then that revenue kicks off, once the order comes within 2 to 3 quarters, I think the revenue mix in terms of the production versus this can significantly, vary, which will also, anchor a lot of change in the overall revenue mix, as well as, the, numbers that you see in the P&L and balance sheet as well. It's a total demography change of, the numbers as well as both in terms of the working capital cycle and all. You will see a lot of change. But yeah, presently this is the mix broadly, I can say.
Sir, sorry, just to clarify, this 25-30% you said is developmental as of now, or otherwise?
Production.
Okay, so more of development right now, which will move into production and hence the benefits.
We have footprint in almost every missile program of DRDO. So you can imagine, the development projects are numerous numbers actually, and different types of technologies. We are not a single type of technology company. There are variety of technologies, different groups, different group heads and